Hello guys and welcome back to my channel. I had to put on a good looking shirt and wear a classy watch because today we will be talking about money. When I say money, two terms should come to your mind: trading and investing, and today we're going to compare between them. Before we dive into the comparison, let's first understand what trading and investing actually mean. Trading is a short-term strategy where investors buy and sell securities within a short period of time, sometimes even within a day. On the other hand, investing is a long-term strategy where investors buy and hold securities for a longer period of time, usually for years. Now that we have a basic understanding, let's start with the first point of comparison: risk. When it comes to risk, it's important to remember the famous saying by Warren Buffett: risk comes from not knowing what you're doing. In trading, the risk is higher, as it involves buying and selling securities frequently, which increases the chances of making a wrong decision. Moreover, traders often use leverage or borrowed money, which can amplify their gains but also their losses. On the other hand, investing is considered less risky, as it involves holding onto your securities for a longer period of time, allowing investors to ride out market fluctuations. However, it's important to note that any investment carries a certain level of risk, and it's crucial to do your research and diversify your portfolio to minimize it. Now, let's move on to the next point: time. As we mentioned earlier, trading is a short-term strategy, and hence, it requires a lot of time and attention. Traders need to constantly monitor the market, track their positions, and make quick decisions. This can be quite time-consuming and may not be suitable for everyone, especially those with a full-time job or other commitments. On the other hand, investing is a long-term strategy, which means it requires less time and effort. Once you have done your research and made your investments, you can sit back and let your money grow over time. This makes it a more suitable option for those with busy schedules. And moving on to the next point: money. This is a crucial aspect to consider before deciding between trading and investing. Trading requires a significant amount of capital, as traders often use leverage to increase their buying power. This means that even a small change in the market can result in significant gains or losses. On the other hand, investing can be done with a smaller amount of money, as you are not constantly buying and selling securities. However, it's important to note that the more money you invest, the more potential for growth you have. Now, let's talk about complexity. Trading is often seen as a more complex approach, as it requires a deep understanding of technical analysis, chart patterns, and market trends. Traders also need to have a quick decision-making ability and be able to handle the stress of the constantly changing market. On the other hand, investing is relatively simpler, as it involves buying and holding onto securities for the long term. This doesn't mean that it's risk-free or easy, but it does require less technical knowledge and a more patient approach. Now that we have compared trading and investing on various aspects, let's look at some real statistics. According to the study by JP Morgan, over the past 20 years, the average annual return for the S&P 500 index, which is a benchmark for the stock market, was 7.2%. However, for those who tried to time the market and missed the best 10 days, the average return dropped to 2.1%. This shows that trying to time the market and constantly buying and selling securities can actually lead to lower returns compared to a long-term investing approach. Before we conclude, I want to emphasize the importance of continuous learning. In the world of finance, the markets are dynamic, and staying informed is key to making informed decisions. So whether you choose trading or investing, make it a daily habit to enhance your financial knowledge. And remember, successful investors aren't born overnight. It takes time, patience, and a commitment to learning from both successes and mistakes. As you navigate your financial journey, consider joining online communities, reading insightful books, and perhaps even attending financial seminars. The more you know, the more confident and empowered you will be in managing your investments. If you have stayed with me this far, thank you. We have reached the end of today's video, and I genuinely hope you found it enjoyable. And if you did, stay tuned for the next video, because we will be covering a lot of financial topics that will help you choose the path that matches your personality. See you soon.